Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Well, in this age of innovation, cryptos have emerged as the most profound technological advancements of our times. In fact, it has reshaped our financial system, disrupted traditional industries, and empowered individuals in ways we could only dreamt of just a decade ago. Well, my name is Kshitij Anand, and in this latest episode of Crypto TV, we'll be talking about the changing crypto landscape with none other than Edul Patel, who is the co-founder CEO at Mudrex, a global crypto investment platform. Welcome to the show, Edul.
Thanks a lot for having me, Kshitij.
Thank you so much for taking time out, Edul. And how are you feeling now today? Let's start with some energy.
So I think where we stand right now, and this is October 2023, we just hit, BTC itself hit like a 1.5 year high, and things seem to be recovering and doing really well. Broadly, I think we are in a space where a lot of, over the last 3-4 years, a lot of cleanup in crypto is happening.
Exactly.
A lot of the bad actors are moving out, and the entire crypto world is moving more towards a regulated, well understood product that people can start investing in.
In fact, if you look at, if you sort of go back a little bit, let's say in 2021, when there was pretty much quite a bit of euphoria that we were seeing in that space. Now that has actually come down, but not entirely. It is still live and kicking at this point in time. And provided you rightly sort of made the base of the conversation here. So in the last couple of you could say the years, how has the climate or how has the landscape changed for the crypto investors?
Sure. So just to start off with some background context, most asset classes that are investment products obviously go through cycles.
True.
A lot of those cycles are partly driven by macroeconomic factors, like in this case COVID and a lot of quantitative easing and interest rate fluctuations and so on and so forth, as well as cycles of fear and greed that are normal, right? Like people start hearing about other people start making money. As a result, more people enter into a cycle. They start making money,
Exactly.
and then more and more people come in.
Yeah.
In crypto, typically such cycles are short-lived, or historically have been short-lived, maybe about 4 to 5 years.
Right.
And where we are right now, at least seems very close to where we were in late 2020, early 2021. At the place where there is a lot of consolidation happening. A lot of the hopes and expectations that were told 2 years ago are actually now starting to see fruit. We are seeing from a developer activity perspective and people participating in the ecosystem, all those numbers hitting all-time highs. Of course, prices are not in sync with them. Prices are separate, and that's completely fine. But from an activity perspective and participation perspective, there have never been more people in crypto than there are right now. And that's actually very, very encouraging. Over the last couple of years, what has happened is that crypto has gone through its own hype cycle. Right? Like this happened about 6 years ago in 2018 as well, and then 4 more years before that in 2014 as well, where first the hype comes in, that raises prices up, and then reality hits, and you realize that okay, life is actually very away from where prices are. And then over time, reality continues to improve and prices come down, and then there is a point where expectation and reality are at a point where okay, it seems like it's real and it's getting there, and that's what causes this next wave of more and more people coming in. And I think we are at that crossroads yet again now.
So a more mature behavior, that's something which...
Oh, absolutely. And I think mature from various different perspectives, right? When you talk about an ecosystem maturity, there's not only a wide variety of people participating that causes that maturity to happen, but it's also more acceptance from the world, right? And we can just take a short example on the regulatory front, what's happening, right? So if we look at just the last year and a half, the G20 nations have come together and said that okay, we would want to regulate crypto and make sure there is a common framework of understanding. And India has pushed that narrative ahead. Inside of India, we've seen that there are now clear application of tax laws, and we've gone through a tax season where, as a country, we for the first time filed taxes on our gains in crypto. Right? There are now a clear registration inside of India under the Ministry of Finance, the FIU unit, where Mudrex is also registered. To get the regulation system started. This is just India. In Europe, there is a very clear MiCA regulation that has come out, which goes into implementation in 25. The same things are happening in US. Hong Kong, Singapore, Canada, Australia are all accepting crypto as an asset class and are creating regulatory frameworks around it, right? So there is a lot of maturity just from that sense. And to be honest, when I look at it from this lens of how fast all of this has moved, I had not expected things to move this fast. Because historically, it hasn't moved this fast in other asset classes, right? Like, for example, I think options and futures in India took about 20 to 25 more years to get the same acceptance that it has world over, right? And that took much longer as compared to something like crypto. So I think maturity is definitely coming in. It's coming in from the regulatory perspective, but it's also coming in from how users think of crypto.
Absolutely.
5 years ago, most people would think of crypto from this perspective ki, let me put in $100 and I will get 1,000 and then I will retire. Right? Like, it was literally thought of more from this lottery ticket perspective, and the unfortunate sad reality is that that's also how it was positioned to most people. True. That it's make 300% returns and so on and so forth. And in reality, that is just the wrong, or for example, misrepresentation of how you should think of investing in any asset class. And that thought process is changing. For a lot of people now, they're thinking, okay, let me park 2%, 5%, 10% of my capital into crypto, invest in it regularly over a large and long period, and make this a part of my broader wealth creation system that I have. So that acceptance is also changing from the individual retail person's perspective. And then on the other end, it always just continues to be that more and more developers are building on crypto, more and more new products are being created that were not there earlier. And all of this tends to show that the ecosystem is maturing, right? Going back to the original point, that maturity level is moving at a much faster rate than expected.
No, in fact, thanks for bringing that out, Edul. And maturity level has actually increased, and as you rightly pointed out, the way it has increased, it is actually outpaces equity markets. I'm more from an equity perspective point of view. I'm more of an equity guy, so I could say that F&O started off pretty long ago, but now the kind of acceptance that futures and options are getting in the market, especially from the retail clients, post-COVID has seen enormous rise.
Correct.
You could see that in the volumes that are there on the stock exchanges. But moving from equity markets to again back to cryptos, tell me, it's a global investment platform.
Correct.
Right? You have more than 1 billion users who are taking part in that. How did that journey started? What led to Mudrex? What's the story behind it?
Of course. So we started about 5.5 years ago,
Okay.
which is an insanely long time in just to think of it now back. And we started back in 2018 from this perspective that financial freedom and access to financial services are fundamentally not available to the average common man, because the way the entire monetary system is created is that it's inefficient. And it's inefficient from the lens of data not being available, money not being able to move freely, and so on and so forth, right? And when we were thinking about this more and more, we realized that how crypto is designed from first principles tries to solve for a lot of these inefficiencies fundamentally. So we felt that, okay, if there is this monetary system, there is this monetary system, and this monetary system is more efficient than this monetary system, simply because it's a more efficient thing. Over time, people will migrate from year to year because there are savings of various formats, and all of those savings can go back to users. That was the very simplistic perspective of why we wanted to get into crypto, because we felt that we could over time build and offer financial services to users in this new age monetary system where money was built for the age of the internet.
Okay.
That's how we got into it. And at that time, this was way back in 2017, 2018, we felt that from an India perspective, there were no good exchanges where people could start buying crypto.
Right.
So we originally started with launching a crypto exchange. But then the RBI ban happened. Like, I remember this very clearly. April 1st, we launched our alpha and got our first 1,000 users to try out the product. We were going to launch our beta in April 15th, and just 3 or 4 days before that, the RBI came out with a ruling that all crypto transactions are banned. And then that continued to say that people who were dealing in, there were these consultancy papers floating around that said that people who were dealing in crypto will have 10-year jail and so on and so forth. Right? So it was pretty scary at that time.
All sort of news were actually flying around.
Yeah,
at that point in
exactly,
time.
right.
And it was difficult because I also happened to be in that taking part in that particular news because it's all newsroom.
Yeah, it was this news cycle at that
news cycle at that point in time, and whom to trust, whom not to trust. That was something which it's our job also at the end of the day, to bring the right information out. And looking at the context which you're setting, which was slightly on the negative part of it.
Correct.
Yes, the right kind of information is always.
So I think the regulators, to be honest, in India have done a fantastic job because the job of the regulator is to make sure that the average retail person is safeguarded and protected.
Exactly.
Right? That's their job.
Right.
Everything else is secondary. For them, the primary job is here. You should not missell things to the average retail person. And I think from that lens, they've done a great job. And they've also balanced it well, where we've gone from a potential 10-year jail term to now it being taxed and regulated. It's not regulated yet, but there is a clear registration of virtual asset service providers and so on and so forth, right? And all of this happening in under 4 years. And that's where the pace is incredible, where I think that a lot has moved. But coming back to the Mudrex story, we started off by building this exchange. But then once the RBI banned, we said that, okay, we still want to, crypto is a global asset class. Like, okay, if India is not willing to do it now, it will at some point in the future. And let's continue to build for the global audience. And that's how we actually started Mudrex, where we went from an exchange and we said that, okay, globally exchanges are a solved problem. But what people don't understand is how do you invest in crypto, and trading is not everyone's cup of tea. Majority people who trade end up failing. What you do want to do is build products for retail investors, and that's how we started. And we launched our flagship product, CoinSets, in about 2020, October, November 2020. Tried it out, it worked really well. It was a simple index investing feature, something like index funds or mutual funds for crypto, and that's how it started off. Because the product was simple and because it made participating in crypto easy. A lot of users joined Mudrex over the last year and a half, and I'm proud to say that most of it is very organic. Like, people just tell other people because we've helped simplify their entire experience of crypto.
Absolutely. In fact, anything which is simple and can be easily understood is, word of mouth just does the trick for us. Now that you've touched upon CoinSets, explain us a little bit more as to what really CoinSets are. Can we say that it is the the simplest product in the crypto space at this point?
Correct. So before we go into CoinSets, let's just talk about investing a bit, right?
Okay.
Sure. Philosophically and also from a historical data perspective, if you want to create wealth in any asset class, what you should be doing is diversifying across a broad basket of things inside that asset class. True. And doing recurring investments. This is the same principle on which mutual funds and index funds are based on, right? There is a basket of stocks or an index of stocks in which you should be doing monthly SIP, daily SIP, weekly SIP, whatever format, so that you are able to dollar cost average out over a long time, and you also get the benefits of a diversified portfolio. This approach has historically been the best approach to invest. Like, over a period of 5 years, 10 years, 95 to 97% of fund managers are not able to beat an index. That's the reality. This becomes more and more apparent as more and more market asymmetry goes away. So the more mature a market, the more harder it is to beat an index, and that is a fundamental principle of investing that applies across asset classes.
True.
So we felt that that same principle is applicable to crypto as well. But what is missing are these index style products. And to solve for that, we created CoinSets, where what we have is a limited variety of indexes that you can invest in. There are either similar to the Nifty 50, Nifty small cap, Nifty mid cap equivalent, where we have crypto blue chip, crypto small cap, crypto mid cap indexes that people can invest in.
Absolutely.
Or just like how you have the pharma Nifty or the bank Nifty or the infra Nifty, which are indexes on a theme, we similarly have a DeFi tracker, a layer 1 tracker, a layer 2 tracker, and so on and so forth. With the same exact ideology that if you want broader market exposure, this is a simple broad market index. But if you want category specific exposure, these are category specific indexes. What this does is that it does two things for the average user. Firstly, this means that the user does not need to keep a track of individual tokens, just like how they don't need to keep a track of individual stocks. All they need to care about is whether the sector or the segment or the category is doing well or not. and is that aligned with their broader investing goals? That's one part. Second part is it takes away all the decision making from the user, because actually the job of active decision making is what reduces people's ability to make money, because it's very emotional as a problem.
Absolutely.
So because the decision making goes away and it's managed as an index where it's not human just necessarily doing it, it's just a rule based system. It just makes investing much easier. And as a result, we've tried to solve for a very simple problem that most of our users have been telling us, ki, where should I invest? मैं कहाँ पैसा डालूं?
Exactly.
Like that's the most common question that people ask us. And when we go back and see, we are not experts from the perspective of telling you that this will 100% go up or this will 100% go down. We believe that this asset class will grow. And if you also believe it, then you should just be investing in these broader indexes that make investing easy for you. And you can then forget about doing the day-to-day looking at and tracking of funds.
So the participation becomes much more easier.
It's much more easier
for the investor. They don't have to physically track each and every asset class, or you could say the product.
Yeah, like again, for the lack of a better analogy, the reason why mutual fund sahi hai works is because it just makes things simple, and that is now causing the largest wealth creation in our country.
Absolutely.
Right? I mean, that entire
16,000 crores of SIP going in.
Insane, right? It's hard to imagine that this is where it would have gotten to, but it works because it's simple. Because it takes away the complexity and it makes the asset class accessible to masses. And those are our goals also with concepts. That see, it's not everyone's cup of tea to figure out which token to invest in. For that matter, it's not everyone's cup of tea to figure out which stocks to invest in as well, right?
Absolutely.
And it's like how index funds take that complexity away, CoinSets takes that complexity away from crypto. And we believe that it's an asset class where a lot of wealth will be created over the next 5, 10, 15, 20 years. In the short term, it will be very volatile. That's fine. Most asset classes in their nascent periods are. Just like how the stock market in India was. Right? But as the ecosystem matures, stability comes in. Over the longer period, you make wealth. That's the premise on which we are operating on.
No, absolutely. That's the right premise. And another thing which is directly related to is the regulatory environment that we are in. And thankfully, across the globe, there's some sort of acceptability has already come in, and we are moving towards a more promising regulatory environment. Your thoughts on that?
No, I think the pace at which it's happening is, to be honest, surprising to me. And I think the reason why it's happening at this pace is because crypto is a global asset class.
Right.
All countries in the world need to agree on how do we treat this. Because if you don't, that causes some format of arbitrage, some format of uncertainty in that local geo. Right. And it's happening at a global level with global consensus, which I think is also very interesting and very powerful. Right. So I actually think that we are seeing regulatory clarity emerge faster than what I had expected. Most of the developed world has come to this consensus that crypto has to be there. It is a part of individual freedom and individual choice of investing and creating wealth. So it's going to be there. Now it's just a matter of figuring out how it should be there and making it regulated in such a way so that people don't end up losing money to scams. And that's the primary job that regulators are trying to solve for right now. And I think they are doing a good job at it. So across most of the developed world, let's say Europe, US, UK, Canada, Australia, Hong Kong, Singapore, there are some format of clear regulations that are there. For the rest of the world, clarity is emerging much faster. For example, as I said, like India is leading that thought process for the G20.
G20 presidency, we saw a positive outcome for crypto.
Correct.
It was on the news cycle that we've been also tracking at that point in time.
Exactly. So that push is there, and that push is there because there is this inherent groundswell demand that people have, right? And as a result, as a regulator, your job is to make sure that that demand is met, but at the same time, people don't end up losing a lot of money that they should not have because of lack of information or knowledge. And that's the job that I think regulators are doing really well. So I think, and then I think this is like this current 4-year cycle of crypto is all about growing up, maturing, becoming a regulated, accepted asset class world over, and we are roughly halfway through that cycle. And I think by Jan 25, when the MiCA rules in the Europe come to play with full force, this acceptance cycle would have seen one end where most of the developed world will now be accepting crypto as an asset class to invest in. not necessarily for some of the other things, but as an asset class to invest in at least. And that's what I think that'll mark the end of this cycle and then the beginning of another regulatory period in crypto.
Absolutely. And a very thought-provoking, you could say, discussion that we are having, and it is actually laying down foundation for a bigger discussion in the future now. And blockchain is again part of the crypto market, and we're seeing a lot of industries have actually adopted blockchain in one way or the other.
Correct.
Right. More so, we're seeing that in the West that is happening.
Correct.
India is picking up. Right. What is your view on that?
No, so I think firstly, blockchain, this technology is the way. There might be various ways to look at it.
Sure.
But in my opinion, the simplest way to look at it is that it's a public open ledger. It's a chalu khata book
Right.
that people are sharing with each other. Now, the reason why this chalu khata book should exist or this public ledger should exist is so that there is clear, open trackability and transparency in terms of who owes what amount of what thing. This who can be an individual, a company, an entity. The amount is just an amount. The thing can be anything that can be digitally tracked. It can be a currency, it can be an asset, it can be a product, it can be a property. And the reason why all of this needs to be public and open is so that access to this information becomes public and open.
Okay.
And as access to this information becomes public and open, information arbitrage goes away. That reduces prices for everyone and makes things accessible to everyone. So that is a fundamental promise of blockchain. As a result, it's valuable in a lot of those parts of the world where value interchange, value transfer, money movement, and so on and so forth is supposed to happen. Right? And that's what's seeing more and more acceptance over time. We are seeing, and that's the part where fundamentally it will first move. And the part will be to move from the current setup of individual intermediaries having their own data, doing everything by themselves to this common public ledger. And then innovation can then be built on top of that. Right? For that matter, I think a lot of the experiments that individual central banks are doing on this public ledger also is very valuable. And let me give you an example. I'm sure a lot of our viewers and readers would have used a Sodexo card.
Okay.
It's a food meal voucher.
Absolutely.
Where the most obvious use case of that is that this is money given to you that you can only use on food, and the benefit you get is that there is some tax offset that you get for it, right? Then this is a very simple use case. Now over here, Sodexo had to create a network, say that okay, this is food, this is food, this is food, this is not food.
Yes.
People were able to put money over here,
yeah,
and then you could use it on this network. Now imagine doing that at the scale of the RBI, where the RBI wants to say that okay, I am wanting to give you this subsidy,
right,
but only to be used on these particular categories. Let's say there is a farmer subsidy that's supposed to go out that can only be used for power, water, and fertilizer purchase.
Right.
That makes that subsidy just way more meaningful and efficient, right? Whereas today, a subsidy is even as a subsidy to be used for anything. The farmer can use that same money to buy a piece of land or do their kids' weddings, right? This makes that money more efficiently usable. And this, when done at the scale of a country, can add a lot of value to the country as well, right? Which is why these CBDCs are more interesting and more useful at the government scale.
True.
So, because it makes money programmable for all practical purposes, where
effective usage of
yes, and as a result, because it's programmable, the usage becomes very, very efficient and very, very effective. And that's where we are heading. And that's the world that we would want to go to and be part of, right? Where your money is more in your control, it is very clearly usable in certain different specific places, as a result, it's more efficient. All of that efficiency leads to improved financial capabilities for individuals, it leads to more financial freedom. And that's I think the promise of all of this in the longer run.
Right. How do you see the trends emerging here in India? Any example that you've been citing in terms of blockchain technology?
So I think the e-rupee progress is doing really well. It started off as a pilot, I think about 8-9 months ago with most banks. Now almost every single bank has an app, and more RBI settlement is going to happen over there. So that's one part. Just credit and lending, I think, has a very large place to play a role in India for using products that are being built on blockchain. And of course, just because the asset class is growing and it's a global asset class where participation happening globally, people will want to naturally use it for growing their own wealth. So investing is a large use case that's emerging more and more. And historically, the way we've seen is people start off by investing some amount, that leads them to go back deeper, think and learn and understand more about why this technology exists, and then that circle continues. The more they learn, the more they want to participate. The more they learn, the more they want to participate.
In fact, when back in 2021, when we were covering cryptos, and the one big question we used to ask experts is that how or what is the kind of portfolio allocation should one do?
Correct.
Probably at that. So at that point in time, they were saying, okay, 5% is something which you can look at.
Correct.
Now we are in 2023, so come forward to 2023. What is the kind of allocation which one should be looking at? Now that things are more clear, now
Correct.
there's more clarity. Investors have become more matured in terms of
Correct.
how they're dealing with the cryptocurrency. They've also, in the past 2 or 3 years, they've also made mistakes, but at the same time, they also learned from it. So the level of the kind of maturity that has come in over a period of time, I'm sure you're also interacting with the clients,
absolutely.
and you're getting that kind of feedback from them. So
Correct.
cut to 2023. What is something which we can?
No, of course, the short and the answer that most people are not looking for is that it depends on who you are and what are your goals are.
Right.
And at least the way we look at it is that typically, for a very broad average person, allocating about 5 to 8% into crypto reduces your overall risk as a portfolio, or gives you higher rewards for the same risk. That's what we see. But it's not. That doesn't mean that everyone should be putting in 5 to 8%. Right? For a lot of cases, you should actually not be putting in any money into crypto. For that matter, not be putting in any money into equities as well.
True.
Because what you should be doing first is just creating a base on which you can build your wealth. On the other end of the extreme, for people who understand the asset class, who want to participate more, that number can be higher, maybe 10, 15 odd % as well. So that continues to change over time. But I think that number still remains between 5 to 10%. The quality of that has now changed. Earlier, people would think of it from the perspective of, let me put in 2%, maybe it will become 20 and I'll be happy. Now the underlying acceptance is that, okay, I want to build or get to this 5% over a period of 5 years.
Right.
I don't need to put in a large amount of money today, but I want to start participating slowly and steadily so that I build this corpus, so that over this 5-year period it becomes large and meaningful. And that, I think, is a very important change in thinking that we are seeing our investors do. In fact, for that matter, we work with a lot of family offices as well.
Okay.
Right? And 3-4 years ago, most family offices would not even want to touch crypto. And the main reason why they would not want to touch crypto is because they were afraid not of losing money. Losing money is fine. Like family offices are a mature investor for that matter. Right? They understand risk reward.
Right.
Their uncertainty was here. ये 2% के चक्कर में, for this 2%, I don't want to come under the radar of the SEC of the SEBI, and I don't want unfair tax implications on myself. So the uncertainty on how gains from it are to be accounted for was very high. Because now all of that has changed.
Right.
We've gone through a tax season,
Sure.
and there is understanding of how it's supposed to be handled. That conversation now changing again. Now they are no longer worried about it, but now they've gone from this thought process of, okay, whether I will come under the radar of XYZ to, okay, now I know all of this is clear. Now how should I start investing?
Right.
What do I start with? What is the amount that I start looking at? How is my money going to be safe? How is it going to be growing regularly, time over time? So
Absolutely.
the quality of questions have changed, which is actually very encouraging to me.
So more acceptability has actually.
Yes, more and more.
Right. So good that you pointed this part out, that how it is changing. But one big thing which most investors are afraid of is the volatility.
Correct.
Even it's true for equity investors.
Correct.
That's why we have IndiaVix or the other volatility tracking platform.
Correct.
Right. So over a period of time, we've seen quite a bit of large swings in most of the cryptos, or you could say
Correct.
most of the bitcoins or Ethereum or
Correct.
products that we have. So, what factors sort of contributed to that? And if in case investors could actually get some sort of understanding, is it the macro-led factors which led to that kind of volatility, or is it the you could say the regulatory or the political factors which led to that kind of volatility in the market? So that is something which I'm sure a lot of investors would be keen to understand as to how to measure that kind of volatility.
Correct. So, let me start off by saying that volatility inside of crypto broadly is a function of liquidity and availability. Like that's what it is. So for example, volatility of a lot of the fringe tokens in crypto will actually be very similar to micro cap equities. Like the ones who, let's say, are between the 500 to 1,000 range.
Sure.
From a market capitalization perspective on the NSE, right? So it's not that it's different, it's a function of liquidity. Because it's less liquid, it becomes more volatile. As soon as people want to participate, the swings are larger. So that's one part. The second part is that of the broader asset class, volatility has been a function of mostly right now macroeconomic factors, and greed and fear cycles. As over the last 4 years, we've actually seen large changes in how money has moved, right?
Absolutely.
We went through a cycle of COVID. In that 2-year period, money was cheap, free and easily available for most of the world.
True.
That cheap, free and easily available money led to a period of immense euphoria where people wanted to take on more and more and more risk, which not only led to crypto markets seeing all-time highs, but for that matter, NSE and Nifty markets also seeing, equity markets seeing all-time high world over, and so on and so forth, right? Over the last 2 years, that euphoria started to die down. And we are now in a world where liquidity, where cash is not actually easily available, interest rates are at all-time high, and that led to a correction larger than expected, which led to crypto, and for that matter, even S&P 500 and so on and so forth dipping. But over time, that has now again become normalized, and we are seeing again this broader march towards acceptance and more people getting into crypto. So this volatility was in part function of that greed fear cycle as well as macroeconomic factors. How I see it progress in the future is that volatility year over year is actually reducing. In fact, we did a very recent research study where we looked at in the last 5 years data, and we wanted to look at risk reward of crypto versus, let's say, risk reward of Nifty small cap.
Right.
And it seems that Nifty small cap has broadly been in the same range, but volatility for crypto has actually reduced significantly, which means that the risk of participating in cryptocurrency is reducing significantly versus Nifty. The risk reward for Nifty and versus risk reward for Bitcoin roughly is the same, except that of course the risk is much higher and the reward also is much higher.
Absolutely.
So it's kind of sort of converging, which again is a sign of maturity of the asset class. More liquidity is coming in, more participants are there. As a result, the asset class becomes more stable. With this entire Bitcoin ETF process that the US is going through right now, this will only enhance, because what ETFs do is they now suddenly give access to Bitcoin to everyone who are in the broader broker networks or exchange traded networks and so on and so forth, right? And that adds more participation, which means that more liquidity, which means that lesser volatility. So it's going through its cycle, and every single cycle the volatility is reducing, the risk reward is improving, and at the same time it's becoming more and more acceptable.
Well, crypto landscape is dynamic and is changing fast, but do keep tracking this space for more on cryptocurrencies. Well, on that note, thank you so much for your time, Edul, for this episode of Crypto TV.
Thank you, Kshitij. It was my pleasure.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.